Why do banks merge? Many of us wondering why a successful bank wants to merge with one another. Well, here's a reason why. In the past years, there are several banks that decided to merge their banks to expand into a new market. A merger is taking place because it also helps a bank scale up and acquire more customers.
An example of these banks are PNB and Allied Banking Corporation and CITIBANK and UNIONBANK of the Philippines. Here's some background of PNB and Allied Banking Corporation. The PNB was established in 1916 as a government bank with the primary goal of promoting agriculture and supporting the government's economic development efforts. The bank also has a long and rich history of providing banking services to Filipinos, and it has played an important role in the country's economic development. And in addition to that, PNB has the largest international office network. Allied Banking Corporation. The Allied Banking Corporation was a commercial bank in the Philippines that provided banking services to Filipinos and businesses. The bank was established in 1977 and had its headquarters in Makati City, Metro Manila. The Allied Bank had a network of over 300 branches and ATMs throughout the country, making it accessible to customers in various regions.
Reasons for the merger. The merger created the fourth largest bank in the Philippines in terms of assets, with a network of over 600 branches and ATMs nationwide. The goal of the merger for PNB is to become the surviving bank, while Allied Bank's long-term strategic business objectives are strengthened and consolidated. To increase market share and expand the bank's operations and customer base, and to improve operational efficiency and reduce costs through economies of scale. Advantages of the merger. The consolidated bank had a stronger financial position and increased market share, which improved its competitiveness and ability to attract customers and investors. The combined expertise and resources of PNB and Allied Bank allowed the new bank to provide a wider range of financial products and services to customers, including digital banking services and international banking services. The merger also helped to strengthen the Philippine banking industry as a whole, by creating a larger and more competitive market that could better serve the needs of Filipinos and businesses.
CITIBANK. CITIBANK is a globally recognized financial institution with a long and illustrious history. The bank was founded in 1812 as the Citibank of New York, and it has since grown and expanded to become a major player in the global financial services industry. Citibank has operations in more than 160 countries, including retail banking, corporate banking, investment banking, and wealth management. Millions of customers worldwide, ranging from individuals and small businesses to large multinational corporations, are served by the bank. While the Union Bank of the Philippines is one of the Philippines' largest bank, with a long and rich history dating back to its founding in 1864, the bank has played an important role in the development of the Philippine economy over the years, and it has been involved in a number of significant transactions and initiatives. Union Bank knows for its innovative approach to banking and commitment to using technology to improve customer service. The bank has a strong presence in the Philippines, with over 300 branches and offices spread across the country.
The merger between Citibank and Union Bank of the Philippines was primarily driven by strategic business reasons. Some of the main reasons why the merger took place include: first, Citibank's global strategy. Citibank is one of the largest global banks and has a presence in several countries around the world. In recent years, the bank has been focusing on its core businesses and markets and has been looking to streamline its operations and reduce costs. The sale of its consumer banking operations in the Philippines to Union Bank is part of this strategy. Next is Union Bank's expansion plans. Union Bank of the Philippines is a local bank with a strong presence in the country's retail banking sector. The acquisition of Citibank's consumer banking operations in the Philippines is seen as an opportunity for Union Bank to expand its retail banking business and increase its customer base. Next is market competition. The Philippine banking industry is highly competitive with several local and international banks vying for market share. The merger between CITIBANK and UNIONBANK is seen as a way to create a stronger bank with a larger customer base and wider reach across the country. Last is cost savings. Mergers and acquisitions can typically lead to cost savings through collaboration and improved efficiency. The merger of CITIBANK and UNIONBANK is anticipated to bring cost savings by integrating systems and consolidating operations. The merger of CITIBANK and UNIONBANK of the Philippines benefited both banks as well as their customers and stakeholders. The advantages derived from the merger include: first, expanded customer base. The merger resulted in a stronger bank with a larger customer base and wider reach across the Philippines. This enabled the new entity to serve a more diverse range of customers and offer a broader range of products and services. Next is enhanced competitiveness. The merger enhanced the competitiveness of both CITIBANK and UNIONBANK in the Philippine banking industry. The new entity has a stronger brand, greater market presence, and a more diversified range of products and services.
The merger of PNB and Allied Banking Corporation was take effect on February 9, 2013, while the merger of CITIBANK and UNIONBANK was recently take effect on 2022.